Welcome back. I'm Peter Armitage from Anchor Capital. This is ANALYSE THIS. We're having a look at Imperial. We've talked through the mix of the business and why we think it's certainly at an 8p multiple, quite well placed for share price performance on kind of a 2 to 3 year view. But we asked the CEO, Hubert Brody, some questions about the business. First of all, the group performance in the last 6 months.
Why was earnings growth so curtailed in this period?
Yes, Juliet. Look, we were 8% up on the operating profit level, and in a global and a South African economy where things are very difficult, there's actually there's no growth easily to be found. We are happy with the 8% growth, but the reason why it's not higher is really the impact of the currency weakness, the rand against our main currencies in which we import vehicles. And therefore, vehicle price increases have had a depressing impact on vehicle sales volumes and also on the margin that comes out of those sales. So that's counterbalanced the very exciting and great performances that we've had across the board in virtually every other division of the whole group.
So it must be fairly discouraging for a management team when you grow your business by 8% in quite tough conditions. And there you had most of the business growing at kind of 15% plus, and a third of the business going down by 20% because of currency and lower sales. But the market whacks the share by 20%. That presents the opportunity.
Yeah, Pete, we've seen Imperial's share price come off from highs of 220 Rand plus down to 160 Rand.
While the earnings are growing.
And earnings are growing. Although we think from a group level we'll probably see flattish earnings for certainly the rest of this year. But as you point out, that's largely due to a very small portion of the business, or a relatively small portion of the business, and the rest of the business is actually growing and in pretty good health.
Yeah. So we're not saying for a moment the business as a mix it has got growth this year, but ultimately when you look at a share and you look at the market, it's about what is in the price. And I guess what we're suggesting is that the price has factored in the fact that there isn't going to be growth for the year. And when growth comes back next year, as it will, because the part of the business that's under pressure will then be lower in the base, that looks pretty exciting. A big portion of it, and something that foreign investors in other companies tend to pay a fairly big premium for, is kind of African exposure. They've made some quite big headway in terms of African exposure. And acquisitions that they've made in Africa over the course of the last 5 or 6 years. But let's ask Hubert about the African acquisitions and if he feels they were justified.
Growth in South Africa is quite pedestrian, and we saw a number of years ago that that's probably going to be the route, the way things are going to go for a while. And we started making some of these acquisitions. It really started with the acquisition of CIC Holdings about 4 years ago, which you'll remember was a listed company in consumer product distribution at the time, and subsequently a number of acquisitions, the RTT Health Sciences acquisition, MDS in Nigeria, and now Eco Health, which is in pharmaceuticals in distribution in Nigeria. And certainly we're able to tap into the faster growing markets. And on the margin, it's making a significant difference to the logistics division's growth and to the group's growth.
So some big moves in African logistics. What can the African logistics be in 3 to 5 years' time?
Peter, I think there's huge room for growth there. The recently announced Eco Health acquisition, that business has got turnover per annum of around $180 million.
That's 2 billion Rand.
2 billion Rand in a division with current turnover of around 2.8 billion Rand. So that's a significant addition to that business. It also complements very nicely the recent acquisitions of MDS and RTT Health, as Hubert mentioned, what's now called Imperial Health Sciences. And it's not just limited to Africa. They've also started some operations in South America, shipping iron ore from Brazil through to Argentina, and we think they're creating a very nice geographical footprint, primarily through Africa, but also across the globe now.
We talked about Africa, but of course what's been in the business for a long time and doing very nicely is the European side. They've got some powerful businesses in Germany. They bought Lenker in probably 18 months ago. That also came through quite nicely in the numbers.
Yeah, I think again showing a lot of resilience in some tough market conditions. Lenkering traditionally has a weaker first half than the second half, so we should see a sort of uptick in that part of the business. But all in all, I don't think we can expect huge amounts out of Europe in the sort of short term. But going forward, it's a very, very exciting part of the business, and it's certainly held up very well in these tough conditions.
And the nice currency hedge
Yeah.
Hubert, in the last clip, talks about the growth expectations for the full year.
I think for a short while things are going to be a bit flatter, and the main reason for that is that the currency weakened very, very rapidly, and you certainly can't put that all through in one bold price increase. As far as car prices is concerned, that's completely unacceptable to do that, and the market will in any event not bear something like that. So whilst the currency seems to have stabilized now and might even come back a little bit, it takes some time to get the price increases through the market and to be accepted. So it's a timing thing that one deals with, and we see that after this year, and the growth rate will pick up again.
So there, I guess Hubert Brody is echoing our sentiments of flat growth for the year. But what's very interesting on the stock market, when shares are flying and earnings, the share prices are going up, people tend to put high PE multiples on higher earnings, and that makes shares very expensive. Conversely, when earnings come down, they tend to put lower multiples on. And that really is what creates investment opportunities, and that's kind of where we see Imperial. I think one of the key points that we need to talk about is the new CEO. Hubert, who we've seen on the screen, has done a fantastic job over the course of the last 5 or 6 years. But as we can see on the slide, Mark Lamberti, who's, in my view, one of the top 3 or 4 businessmen in the country, is taking over as CEO. He's taking over the helm literally now. Hubert, I think, as we see in the South African environment, guys are retiring a lot earlier to go and spend a bit more time with their family. So Mark Lamberti at the helm would give us a lot of confidence about the business. I think he'll look at things in a new perspective. He built up Massmart, and we're excited to see what he can do with Imperial. So Imperial's a share which we think is cheap, flattish for the moment from an earnings point of view, but we think at an 8 PE multiple, when earnings start coming through again next year, a share that can do pretty well. I'm Peter Armitage. This is ANALYSE THIS. Join us again next week.